Hi, good afternoon, and thank you for joining us for this webinar on money laundering through real estate. For those who weren't with us on Wednesday, we're here from Malta's Financial Intelligence Analysis Unit, which is Malta's Financial Intelligence Unit on the one hand, but it's also Malta's Anti-Money Laundering Supervisor. My name is Clara Borgbonacci. I'm from the FIAU Guidance and Outreach team, which is a relatively new team established in the Legal Affairs section. And our team is responsible for drafting guidance, carrying out training, and any other outreach initiatives to address any weaknesses in knowledge on money laundering and risk understanding. I'm joined today by my colleague, Janika Pisani, who is a senior officer in my team. And together we'll be delivering the second part of this two-part webinar on money laundering through real estate. Just some quick rules before we dive in. This session is being recorded and the recording will be uploaded on the FIU website for all to watch. So please keep your microphones muted throughout the whole session. Videos won't show in the recording, but just to be safe, please keep your videos off too. We'll also be taking some questions at the end of the session, and you can ask the questions in the public chat, and that's where we'll be looking for the questions. So let's dive in. So why did we choose real estate? On Wednesday, we explained that property continues to be attractive for homeowners. It's a good, reliable investment with relatively little expenses, and Malta's property sector is quite strong, whether it's purchasing or letting, whether it's for holiday, residential, or commercial purposes. And we also note that in Malta, a property purchase, for instance, involves quite a few subject persons. So you will always have a notary who publishes the deed, and it's very common to have a real estate agent involved and also a bank who will be financing the acquisition. It's also common to have, at times, an accountant or a lawyer or a tax advisor or a company service provider providing their clients with advice on the acquisition of property. So it's important that all these entities, which are subject persons and as gatekeepers of Malta's financial system, to have a very strong awareness of the money laundering risks that they are exposed to when they provide these services relating to property or any other service, actually. And that they are also familiar with the money laundering indicators, so what we call red flags or suspicious activity. In February of this year, we published a guidance note to improve risk understanding, so a guidance note specific on the property sector, risk factors, mitigating measures, red flags, and case studies, and we're complementing that with this webinar. Now, during Wednesday's session, which will be made available next week on our website, we discussed common money laundering typologies that involve real estate. In the context of AML, when we speak about typologies, we are referring to the methods, techniques, and trends that criminals are known or have been known to utilize to launder their money. So how criminals and money launderers use certain methods, certain service providers, certain sectors to launder their money. We also spoke about those different customers, geographical connections, financing methods, and interface or delivery channels, which tend to increase your risk of money laundering. And we also gave examples of the type of measures that you would be expected to carry out or that you should carry out to mitigate these risks or try to eliminate them as much as possible. Now today, Janika and I will be bringing these risk factors and typologies to life through two real-life cases, which, after detailed analysis by the FIU's intelligence analysis team, it was determined that there was indeed a suspicious ground for suspicion of money laundering, and these cases were sent to the police for further investigation. It doesn't matter if you weren't with us on Friday, because this session can be considered as a standalone session in itself, but you're also always welcome to watch the recording. So throughout the session, we will also pinpoint red flags as suspicious indicators and discuss what subject persons should do when faced with similar scenarios to make sure that they don't end up facilitating money laundering. Case studies are also good, and this is also why we choose to include them in our guidance and to provide training on them, because subject persons can see exactly why customer due diligence is important and what happens if you don't carry out your customer due diligence measures. And we'll also explain what red flags you should be looking for too. So I'll give the microphone to my colleague Janika, who'll start with explaining the first case study that we have. Thank you.
Hi, everyone. Good afternoon. So today, the first case we'll be exploring is actually super interesting. My colleagues in the analysis section brought this to my attention, and it's definitely interesting. So, okay, so here we're faced with a particular person. She is the wife of someone well known in Malta to be a criminal. So this person, this criminal, is known for drug trafficking, drug possession, and theft. And as we know in Malta, Malta's a pretty small island, so people know each other, and certain names should definitely ring certain alarm bells. So this person who was conducting the sales, as in, so we have the wife, Mrs. B, she purchased multiple properties which are scattered all over the island. Also interesting to notice that in a 10-year span, over 20 properties were purchased. Now, there was no particular preference, so they were average in value. However, they were mainly in the center of Malta, but still pretty much scattered everywhere. Now, very worth pointing out is the fact that in the deeds of sale, Mrs. B was always listed as being a housewife, as being unemployed, and also as being the wife of this particular criminal. Another important fact in this case was that over half of the properties were actually purchased with the same notary. And Mrs. B, let's call her that, she never used a bank loan to finance the properties. So most of the time, these properties were actually purchased through lump sums of cash. As we said, in all the deeds of sale, she was always noted to be unemployed, and also she was always listed as being the spouse of this particular criminal. Okay, Clara, perhaps you could outline the red flags in this particular case.
Sure. So when we take a closer look at the story, we'll notice a lot of rather basic, fundamental red flags. Just to recap, red flags are indicators of possible money laundering. Now, a red flag on its own isn't necessarily a suspicion and should cause you to report immediately, but rather the presence of a red flag or a combination of red flags should lead you to questioning further, to understanding, and if need be, obtaining documentation to try and establish whether there is a justification for this particular behavior, scenario, indicator, etc. And if not, see if there is a cause for suspicion and file a suspicious transaction report. It's also good to remember that red flags are compiled on the basis of behaviors, trends, and patterns that are common to money laundering cases. So in a lot of cases where property is involved, you will always have one or more of the red flags that will indicate throughout this webinar. So let's look at the particular red flags of this case. So the first one is the fact that the buyer was unemployed. And it's typical in a contract, at least in the contracts of sale in Malta, that the buyer's occupation is always listed, even if the buyer is unemployed or if the buyer is retired and so on, or if the buyer is a student. Now, why is this a red flag? First of all, property is expensive and it's very commonly financed through a bank loan. So where does the buyer get the money from if they do not have an income? Again, as we said, a red flag isn't an automatic suspicion. There could be a legitimate reason for it, and your duty is to question where the funds are coming from. But also in this case, we have an unemployed person who was in a position to pay for properties without any financial assistance. And this is made even worse by the fact that the property was financed in cash. So we're talking about bank notes. We explained the risks that are associated with cash on Wednesday, but very briefly, cash is the most popular means of payment. In the criminal underworld, it's untraceable, it's anonymous, it doesn't leave an audit trail, and it's practically impossible to trace the source of the cash back to the activity that generated that money. So it's very difficult to determine if that cash is legitimate or not, and it's also very difficult to determine whether any evidence that is being brought forward by the clients to justify the earning of that cash is actually associated with that money. And also, when you think about it, banks offer a good degree of security and peace of mind when it comes to money. So you would sort of question why people would have such large amounts of cash in their personal possession. Now, finally, the buyer's spouse was known for involvement in drug trafficking and theft. It's also a common typology to use family members or business associates as a front. to hide criminal or money launderer's identity or to hide any connections with criminality. And in this case, the use of cash made it that much easier to do so because there were no bank transfers between the spouses. And all this was compounded through the fact that the buyer bought a staggering amount of over 20 properties in the span of 10 years. Now, this is something that the notary would have noticed, would have definitely remembered, because the notary published the deeds for more than half of these properties. And so this is where customer due diligence obligations come in. Of course, if you are aware of the red flags and risks associated with the property, you're in a much better position to detect suspicion, but also it shouldn't be a coincidence. It shouldn't be a coincidence that you detect that something is suspicious. And customer due diligence requirements are there for a reason. And our guidance and our implementing procedures, be them the Part 1 or the sector-specific ones, are there to guide you in asking the right questions and obtaining the right information to sort of mitigate any risks or to reassure yourself when there is something that is not typical or is not usual. And doing so will put you in a much better position to detect any suspicious activity. So based on this case, Janica, can you explain what the subject person should have done, or more importantly, what a subject person in such a position should have done?
Definitely. Thank you very much, Clara. Okay, so the notary should have definitely requested more information, especially with regards to the source of wealth and the source of funds. As we're saying, most probably the person went up to the notary with probably bags of cash, so more questions should have been asked. Also, even with a simple internet search, so even just by searching the name both of the purchaser and even of the spouse, that would have definitely given the notary a lot of information. So the adverse media would have popped up, and this was something which should have definitely been noted. Based on the above, the notary should have proceeded to file an STR because, needless to say, we don't expect subject persons to be investigators, but as in this case, a number of red flags did exist and subsist throughout, so the notary should have proceeded to do so. Now, as we're saying, the notary involved in the case, in this case, he was probably seeing around 1 or 2 deeds every year for a 10-year span in relation to this particular purchaser. So it was definitely something to have picked up upon.
Okay, for that, Janica.
Okay. So to move on to the actions taken by the FIAU, this particular case was brought to our attention by an STR submitted by not by the notary or by any of the notaries involved in in publishing these deeds, but it was actually submitted by a credit institution. Which this credit institution was the credit institution of one of the sellers of the property. So when Mrs. B purchased one of these properties in cash, in one particular case, there were 2 sellers, and each of these banked with the same credit institution, and they each went up to the bank with 70 or 80K each in cash. The bank did their job. They asked certain questions, they inquired, and they were not happy with the answers provided. So they proceeded to file the STR with us and brought this case to our attention. From our end, we proceeded to carry out the analysis, and we concluded that there definitely was a reasonable suspicion of money laundering based on the fact that over 20 properties were purchased within a 10-year span. And as we said, most of these were funded in cash, and also because the same notary carried out the deal of sale for over half of these properties. Upon the basis of this reasonable suspicion, we proceeded to also forward the case to the police for further investigation. I'll now hand you back to the hands of Clara so she can explain the contents of the second case study which we have prepared for you today. Thank you.
Thank you, Janica. I hope you enjoyed that first case study. Now let's move on to another case study where the buyer, in this case, was not Maltese and had no particular connection with Malta. So Malta was just being used to launder foreign proceeds of crime. It's good to be aware of the fact that Malta is an international financial center, and this means that we are exposed to the risks of laundering both domestic but also foreign proceeds of crime. And this is something that you should keep in mind, of course, even when carrying out your risk assessments. So in this case, we have a situation where the suspected money laundering, the suspected money launderer, who we're going to call Mr. X, was involved in a scheme where the predicate offenses were both tax fraud and a fuel scam. So in this case, Mr. X, who was a foreign national again, was involved in a large company that was established outside of Malta, and this company dealt in aviation fuel, among other things. And as part of the scam that they had going on, Mr. X would acquire jet fuel, and then the company would claim that the fuel is to be used for aircraft fuel. And this particular activity was tax exempt in the particular jurisdiction where the case was going on. Then, through his company, Mr. X would go on to mix the jet fuel with other types of fuel and fraudulently distribute it to petrol stations, obviously at a hefty profit, but also saving a lot of money that should have been paid in tax. And this was the illicit activity that generated the dirty money, which then had to be laundered very quickly. So these are then the facts of the case of the laundering process. Mr. X bought 5 very high-end expensive properties in highly sought-after areas in Malta, and the value of these properties totaled to 3.5 million euro. Now bear in mind that this was a few years ago, and so the value, 3.5 million euro, was quite significant when considering that there were only 5 properties. It's also interesting to note how these deeds were purchased. So there was an element of distancing. In some cases, Mr. X acquired the property directly, so he appeared on the deed directly, whereas in some of the cases, Mr. X transferred money to a local legal professional who was licensed as a trustee, and the property was acquired by the trustee for trusts set up by Mr. X, but for the benefit of his children. Now, it's important to note that all 5 deeds were published by the same notary, and this is similar to the case that we had before. So far, so good. Then what happened? Mr. X was eventually indicted abroad because of the activities that were going on, so the tax fraud and also the fuel scam. And once he was indicted and upon hearing of this activity, Mr. X's bank, which, a bank in Malta where Mr. X held an account, became aware of this information through their regular screening of adverse media and other screening for other purposes. And once they became aware of this information, immediately filed a suspicious transaction report. And that opens up a case where the FIAU starts to assess all elements and all forms of transactions and connections that the person would have with Malta. So the FIAU started its analysis and made various requests for information, both to local subject persons, but also to our counterparts abroad, so FIUs abroad in the country where Mr. X would have been connected. And this led the FIAU, after an analysis, to trace the funds that were used to purchase the property to different sources. So some of them were foreign bank accounts that were held by companies that traded in fuel and had links to the suspect's home country, so to Mr. X's home country, so there was a close connection there. But also some were traced back directly to bank accounts held by companies which were owned by Mr. X. And Janica will take us back to this case and pinpoint some red flags that one would have noticed if they were perhaps paying a bit more attention.
Perfect. Thank you, Clara. I'll add on to practically what Clara said. In the meantime, however, I would like to remind you all to please mute your mics if possible. Thank you. Okay, so based on this case, one of the facts which should have been noted by the notary was that the purchaser had no meaningful connection with Malta. So the question should have definitely been asked over here. Why is this person trying to buy property in Malta? Why is he buying property in Malta? Especially bearing in mind the high value of these transactions. Furthermore, the purchase of multiple properties in such a short time frame, as we said and as Clara said, it was a 3.5 million, which even today is definitely significant, so let alone in the past. Furthermore, the same individual was affecting multiple property purchases and each time was using the services of the same subject person. Now, this might not be a red flag in itself, but it's definitely something to consider. Is this person seeking the services of the same subject person merely because the subject person is closing a blind eye to certain activity, or is it because they're comfortable transacting with the same? And the use of structures and legal arrangements to acquire property, which could have been done to a person would probably opt for this type of typology even to distance themselves further from the property and to hide the beneficial ownership.
Thanks, Janika. So on the basis of what we've seen and the red flags we've seen, we'll just give some advice on what the subject person should have done or what any subject person should do when faced with similar cases. So, and one of the cornerstones of customer due diligence, particularly the identification and verification rules, are there for you to establish that you know exactly who you are dealing with and that the person that you are dealing with is exactly who they purport to be. Well, it's also important to know that there were quite a few high-risk elements in this case that should have triggered the subject person to carry out some more enhanced due diligence measures. So what would these be? So first of all, in this case, we had a buyer. In some cases, we had a buyer that was a trustee, and so the subject person should get some information from the trustee about the trust. Definitely, in line with regulatory requirements, identify the beneficial owners of the trust, including the settlors and the beneficiaries, and in which case you would also then be able to establish the connection between, they would have been able to establish the connection between the buyer who appeared as a buyer on other deeds. And it's also good to understand why the property is being bought through a trust. On Wednesday, we also explained that one of the higher risk factors is when you have a buyer who is seeking to buy property in Malta, but they have absolutely no connection in Malta. And you should try and understand why. There could be a perfectly legitimate reason for it, but there is also always the risk that the person is trying to distance their assets from the country where they were generated, and of course make them harder to trace by competent or by law enforcement authorities in their country. In higher risk scenarios, so where you have the presence of certain high risk factors, it would be good to screen for any adverse media. Even a simple search on open source information could lead you to certain results that might make you want to question further. As we usually say, when you're carrying out an occasional transaction, it is not strictly obligatory to request the source of funds, but it is important to take mitigating measures to take customer due diligence measures that are commensurate with the risk that you are being exposed to by way of a particular transaction. Now, in this case, we had a lot of high risk elements, and among these high risk elements were the actual funding, the actual financing of these properties. So it would have been essential to establish the source that generated these funds to purchase these 5 properties up to 3.5 million euro, in which case one would have been in a much better position to establish some room for suspicion there. I'll just go run you quickly, even for your information, on what happened in this particular case. So, of course, after a detailed analysis where the FIAU gathers information from different sources and analyzes information, financial statements, etc., that it has in its possession and that it receives from other sources, it established a reasonable suspicion of money laundering, and the case was forwarded to the police for further investigations, and information was also sent to the foreign FIUs of the jurisdictions that were connected, because it is in their interest to know. The immovable properties owned by this person and the bank accounts were attached, and foreign authorities were also informed about the assets that were held in Malta. The bank accounts were also frozen, so a freezing order was issued on the bank accounts, and the local law enforcement authorities remained in contact with the foreign law enforcement authorities, and the investigation was being carried out. So we will now move on to some general red flags. So these were 2 case studies. We hope that you enjoyed them, and we also hope that they open up your eyes to the possibility of being used to facilitate money laundering and the importance of carrying out your due diligence accordingly. We'll go through some general red flags that you should look out for when providing services relating to the buying and letting of property. It's also important to mention here that not all subject persons will have visibility to the same red flags. So, for instance, a notary would not be involved at the stage where the price of the property is being negotiated. It's more likely that the real estate agent would be exposed to this information. Then on the other hand, for instance, there is some information that the real estate agent might not necessarily be exposed to. So of course you have to understand that not all red flags would be relevant in all particular cases. So Janica will start by going through red flags that relate particularly to the purchaser.
Perfect, Clara, thank you. Okay, so with regards to the purchaser, the first red flag that we've listed is one where the purchaser wants to buy multiple properties at once, either that or multiple properties being bought within a relatively short time frame. The second is the source of the purchaser's funds, where this is questionable, or where the purchaser is highly uncooperative when asked to provide information on the source of funds. Needless to say, when a person becomes defensive when asked certain questions, you should be inquiring as to why this is the case. It's only natural to a certain extent that when certain questions are asked, we might not feel so comfortable providing them, but bearing in mind the transaction, the amount, etc., this is an inevitable question at the end of the day. The purchaser is not so interested in the location or in the condition of the property, or even in the projected repair or refurbishment costs. This is another red flag, because needless to say, property transactions are pretty high in value. So a person should definitely feel inclined and interested in the location and the condition of the property being purchased. And another red flag on the purchaser is where at the last minute, the purchaser introduces an unknown party or substitutes the purchasing party's name for no apparent reason. So all of a sudden you have a third person stepping into either the shoes of the purchaser, which person was totally uncalled for. Some more red flags in relation to the purchaser, one of which is where the purchaser is utilizing obscure or very unusual means of financing the properties. For example, cryptocurrencies might be considered to be high risk. However, it's not necessarily, it could just be a high risk. So it's something to inquire, particularly when you have someone who requests funding in a particular method. So if you have a seller who is looking at receiving funds solely in cryptocurrencies. Another red flag relating to the purchasers where the subject person is unable to properly identify the customer or beneficial owner, or there are questions surrounding the customer's identity. The purchaser is highly uncooperative when it comes to providing basic identification and verification information, or is avoiding providing such information. Again, certain attitude and certain behavior from the purchaser should ring certain alarm bells. The purchaser provides information which is vague, misleading, or difficult to verify. Where there is adverse media about the purchaser, as was the case, for example, in the first case study which we explored today. Another red flag relates to the purchaser providing false, misleading, incorrect, or conflicting information, or provides documents which appear to be forged or somewhat altered. The value of the transaction is significantly inconsistent with the occupation or financial standing of the purchaser, or does not reflect market values. The purchaser is evidently living beyond their means, so this ties in with the previous red flags, where you have certain occupations which are known to have a limited amount of income. If this person is seeking to purchase a property with a higher value, it should be questioned. The purchaser is seeking to use large amounts of cash to fund the purchase. Again, as we saw in some of the case studies, it's a very common typology, especially here in Malta, for people to use large sums of cash. This doesn't make it okay, so questions should definitely be asked. And finally, the purchaser has been identified or designated on sanction lists, linking them to terrorist organizations. Okay, thank you. Perhaps you could explain some red flags in relation to the vendor.
Sure. Thank you, Janica, for that. It's quite interesting to speak about red flags relating to the vendor. When it comes to property sales, our main concern is actually the purchaser, because typically the risk arises from the fact that there are funds being transferred to purchase the property, and our risk is that those funds are tainted, so that those funds are somehow dirty. However, both buying and selling of property are known typologies, and criminals are also known to buy and sell properties quickly and go back and forth, each time increasing the price of the property and each time laundering more funds as they go along. And however, you could also, the vendor could also be trying to avoid tax, which is a predicate offense that leads to money laundering, and that is also something that you should be careful about as a subject person. So, some red flags. So when it comes to negotiations, example, this is one of the examples that the notary would not be exposed to. It's more likely the real estate agent would be aware of. So if the vendor is not interested in trying to get a better price for the property and they're just interested in selling it. We mentioned last time that criminals are aware that there is a cost to laundering money, if this is the case, and they are ready to pay that price. We've noticed, and even from information that we receive from our counterparts, that there are cases where money launderers are ready to lose up to 40, even 50% of the money to be able to launder it in a very secure manner. One instance where you might be able to detect tax evasion, and this is a very serious occurrence, and the moment that you notice it, you should be very vigilant and obviously not be involved in this type of transaction, is where the parties agree on one price on the contract, but the price would be lower than the actual value of the property, and there is some form of communication that indicates that the buyer has agreed to pay the remaining amount in secret or behind the other party's back, and this would be to reduce any tax that is owed on the property. Another typology is when you think that the property is being sold for significantly more or significantly less than the market value. Again, you are not expected to establish the market value of the property, but do use your experience and your knowledge of the market and try and determine whether, if it's very obvious that there is a distinction, try and understand what's going on. This becomes harder to detect with certain properties that might be, for instance, luxury or high-end, even because the finishings themselves increase the price of the property. But this is one of those areas where it's key to be aware of the market and what properties typically go for. Again, this is also an example of one of those red flags that it's more likely that the real estate agent would be aware of than the notary, as the notary would not have seen the property, would not necessarily be aware of its location, of its exact location, or of its condition, or of what's inside it. And of course, a red flag is when you have the purchaser and the vendor who are appearing to collude with each other, as it might indicate that the purchase is being simulated as a means of layering or laundering funds. Our next set of red flags relating to the vendor, you could have instances where the purchaser is financing the property, so financing the acquisition from funds given by the vendor, so from a loan that is being given by the vendor, and that makes it all the more questionable, because then you would have the possibility that the vendor has also provided the repayment funds to the buyer in a hidden way, and the buyer will be paying the vendor. And these repayments would be the means to launder the money, and this would allow the vendor to launder the funds. This is what is called the loan back scheme. You could also have situations where the vendor is pressuring the purchaser into using the notary that the vendor would like. Again, there could be legitimate reasons for it. Sometimes vendors could be much more comfortable using the services of their notary, perhaps because they trust them more, or they would just prefer to deal only with them. But it could also, unfortunately, be indicative that perhaps that vendor would prefer not to use a third party who might be a bit more scrupulous, a bit more meticulous in their work, and ask a bit more questions. One common red flag is when you have an immediate resale of a property, or else a property that is being sold shortly after having been acquired, but when this is done so for no apparent economic reason. So your duty there, if you notice that the property has just been purchased and is being resold quickly, is to try and understand why. Again, there could be legitimate reasons for it, but your duty is to understand this, if there is such a reason. Likewise, if this is the case with this red flag and there is a significant increase or a decrease in the price, and your duty is to try and understand why, even because quick successive resales of property are a common money laundering typology. One red flag that you should be concerned about is if the parties agree on the deed or the parties declare on the deed that the funds have already been transferred to each other before the transaction, because this could be a way to layer funds. We are aware that there are service providers who request documentation to substantiate this declaration, so they might ask for bank statements or receipts from the receipts that the funds have actually been transferred, and just to try and establish that the funds have actually been transferred. Of course, if you have adverse media about the vendor, now you are not necessarily expected to screen for every single buyer and vendor that you have on a deed, but the higher the risk of the property, perhaps because of the value of the property or some other factors which we mentioned on Wednesday, which render it high risk, you might consider that it's a good measure to try and mitigate that risk by understanding if there is any negative information about the people on the deed. Yannicka earlier mentioned the use of cash or cryptocurrencies. If you have a vendor who is seeking to sell the property exclusively to persons who will pay in cash or who will pay in cryptocurrencies, this is something that you should be quite careful and quite wary about. It's not a standard funding method. It's not a secure or regulated funding method, strictly speaking. And these funding methods are also associated with a high degree of anonymity. So this is something that is considered quite risky. Now, we've spoken a lot about property sales and purchases, but also letting is also regulated under Money's law. So where the value of the lease is more than 10,000 each month, 10,000 euro each month, then this is subject to anti-money laundering obligations. And so we should also include some red flags relating to lease.
Perfect, Clara. Exactly. We'll also be exploring some red flags about lease. For instance, where the property is being leased for significantly less than the rental value, at least on paper. We say at least on paper because, for instance, there are certain cases where on paper an amount would be indicated, but this could be indicative, if it's pretty low, that some other funds are being passed under the table. Another red flag is where the lessee is not interested in the features and neither in the conditions of the property, or has not even bothered to view the property. So when you see a certain attitude from the lessee who is pretty unbothered in the property, but seems to be seeking a lease merely for the sake of it, so that becomes pretty suspicious in itself. Where the value of the lease is significantly inconsistent with the customer's profile. Again, if you have persons who claim to be earning a certain amount where the lease is significantly more than this, certain questions should definitely be asked. And from your end, this should definitely ring certain alarm bells. And the last of which is where the purpose of the lease does not make sense.
Now, some red flags that don't relate specifically to the buyer or the seller, but relate to the transaction itself. So the first one is if the buyer or the seller are carrying out the transaction on behalf of somebody who does not lack the mental or economic capacity to appear on this deed. So you could have minors or incapacitated persons. And this is something where you should try and establish what exactly is going on. Again, there are completely legitimate reasons why this might be done. When there is a sense of urgency, this is always something that's quite worrying, and you should try and understand the reason behind this urgency. Sometimes it could be a question of an economical issue. Sometimes it could be an issue where somebody needs to leave their residential home immediately and needs to find accommodation where to live immediately, perhaps for safety reasons, for financial reasons, and so on and so forth. But you should try as much as possible understand the reason behind this urgency. And we say this because with urgency comes pressure, and with pressure comes also the urge to not carry out your due diligence to its fullest, because sometimes it takes time to do so, and you might be pressured by your clients to rush through things. If there are any unexplained last-minute changes, I mean, Yannicka explained this already, but you have to see the nature of the last-minute changes. Sometimes they make sense based on your experience. Sometimes there is something that's just not adding up, and your duty there is to slow things down and understand what's going on and only proceed with the transaction if you are comfortable doing so, and if you are comfortable with the changes that are going to take place. And of course, this is a massive red flag, and I am sure, based on my discussions with a lot of notaries in Malta, if you are being, I mean, I'm sure that if you come across this scenario, you are urged to refuse this transaction and to refuse servicing this client if you are being requested to declare, for instance, a different payment method on the contract to the method that is actually used. And I know that this is definitely a no-go area, but we feel that we should mention it here. Some more red flags here, and this one is similar to the one that we just spoke about, where the notary is being requested to declare a payment method on the contract, yet there is no evidence of this transaction. And this ties in to what we mentioned earlier, particularly when the parties tell you that the payment has already been transferred. You should seek to establish that the transaction did actually take place. So when you have the involvement of a politically exposed person, we also already mentioned the risks associated with politically exposed persons when we explained risk factors on Wednesday, but be particularly careful if there is a donation or a third-party payment from a PEP or to a person who is a PEP. Of course, you should seek to understand why this donation. Perhaps the PEP is a parent who is lending some funds to their child to acquire their property. It makes a difference depending on the amount of the funds, depending on the salary of the PEP. If need be, question the source of these funds and establish that they are legitimate and they have been derived from legitimate occupation of the PEP. And finally, if the parties abort the transaction, you should be careful that any funds that you are holding, so if you are a notary and you are holding a deposit, that the funds go back to the same person that gave them to you and in the same manner that they came from, and that the narrative on the refund, so if there's a bank transaction, states the reason for the reversion of the funds. It is incredibly important to not revert funds to any other place other than the original source of the funds, because this could be an attempt at layering the funds. So you could be asked by any of the parties to channel the funds elsewhere, perhaps to a bank account in somebody else's name or in another country. And this is something that you should be very careful about. And this brings us to the end of this webinar. We have some time allocated for questions. So one of the questions that we have relates to cases where persons will acquire property but will use different notaries to do so. And we understand that when this takes place, it is not always easy for the notary to identify this. Sometimes when a notary is carrying out the research on the root of title of the property and on any liabilities owed by the parties, they will come across deeds which indicate that the party has acquired previous property, but this might not necessarily be the case. So your duty there, I mean, this is one of those things where if the notary does notice such behavior taking place, then they should question it, but they are not outright expected to look for this actively and establish it in a definitive manner. One thing that we should mention, we earlier spoke about cash, and we mentioned this on Wednesday, but I think it's worth repeating here. We mentioned cash as a typology. Of course, you should be aware that there is a policy to introduce cash limitation in Malta on the acquisition of property and certain other high-value goods. And this is currently in the works, so when this restriction comes into function, people will not be able to acquire property or certain other high-value goods which exceeds 10,000 euro in cash, will not be able to make cash payments of more than 10,000 euro. So this sort of protects both the notary and the real estate agent if they are pressured by their clients to accept such payments, because we are already aware, thankfully the awareness about the risk of the use of cash is quite strong, and we are already aware that there are subject persons who refuse to accept cash over a certain amount. And I think it is also important to note that the FIAU uses other sources of information, other sources of intelligence when compiling its analytical reports, not just information from subject persons. So we are in a better position to detect, well, to analyze certain cases and to understand what is going on. We do not expect subject persons to carry out full-blown investigations. And we are aware that they do not have the tools or the resources to do so, but when establishing a suspicion, if there is indeed a suspicion, you are encouraged to try and give us as much information as possible so that then we can elaborate on the case. We'll just assess if we have some more questions. So we have some more questions, and these are going to be answered by Dr. Alexander Monjan, who is the head of legal affairs at the FIAU. So I'll pass the microphone over to Alex. Thank you.
So thank you, Clara. We'll be taking a couple of questions that we got through the chat. One of the questions was in relation to the threshold that is applicable for the carrying out of customer due diligence in relation to lease of a movable property. It is important to know that following the transposition of the fifth Money Laundering Directive in Malta, subject persons are now obliged to ensure that they carry out customer due diligence obligations when they are involved as real estate agents in the brokering of lease of a movable property, which would be of a value of 10,000 euros or more. Another question which we received was in relation to situations where a notary would be receiving funds in cash and the requirements to ensure that the money is sent back to the customer using the same method of funding that is returning the amount back in cash, and the reasoning behind this requirement. So such requirement is intended to ensure that the notary would not be inadvertently laundering the proceeds of crime. The depositing of the funds in cash and the actual transmission and returning back of the funds through a bank account to the customer would be assisting the customer in actually laundering the funds. So this would have changed the nature of the proceeds of crime from cash money to funds in a bank account that could then present it as laundered money and could be used as legitimate funding. So that is why we urge subject persons to ensure that then when they are in a position not to be able to complete customer due diligence, they ensure that they return the funds back to the actual client using the same method of funding as they would have acquired that funds.
Thanks, Alex. So there's also another question about the customer due diligence measures that need to be carried out when there is a lease agreement. So with the transposition of the fifth Anti-Money Laundering Directive into Maltese law, the requirement to carry out due diligence on lease agreements takes place or is triggered when the value of the lease is of 10,000 euro per month. So this is the current position, and this is also reflected in the most recent regulations. And this is a transposition of the fifth Anti-Money Laundering Directive.
So another question we received is related to the treatment of STRs received by the FIU. And someone asked whether the FIU safeguards the confidentiality of whoever submits an STR to the FIU. Well, it is important for subject persons to understand that the FIU is legally obliged under the money laundering regulations to ensure that it protects and keeps confidential the identity of any subject person who submits STRs to the FIU. Apart from that, it's important to note that when the FIU receives an STR, it does not automatically remit that STR or send that STR to law enforcement authorities. That STR would be a trigger for an investigation to be initiated by the FIU. And the STR would be one of the sources of information that the FIU would use to pursue that case. In the carrying out of the analytical process, the FIU would source information from other sources, including foreign FIUs, other local subject persons, and also other information that the FIU has access to. And when the FIU comes to the conclusion that there is a reasonable suspicion of money laundering or funding of terrorism that would justify the submission of an analytical report to the police, the analytical report would not include details on any person that would have submitted an STR that would be related to that case. This is the way the FIU operates, and this procedure is also in line with legal obligations that are envisaged under the money laundering regulations. So another question that we received was in relation to situations whereby transactions would be covered by an attachment order. So someone asked if there is an adverse media regarding the vendor, such as he's being charged with a criminal activity, and over and above, there is also an attachment order. Do you simply stop the transaction or file an STR? The answer to this question is quite straightforward. The subject person should, first of all, ensure that he does not carry out the transaction and also file an STR with the FIU. There is also a criminal offense under the Money Laundering Act for someone to infringe an attachment order. So an attachment order is meant to attach assets, funds in the hands of both the suspect as well as any third party who would be holding funds for that suspect, and it is a criminal offense to infringe that attachment order. So it's also important for the notary in that case to, apart from informing the FIU, inform also the authorities who are in charge of issuing attachment orders, being the police and the Attorney General's office.
So there is also another question which states that what if there is a clause in the promise of sale which states that if the purchaser doesn't appear on the contract, they lose their deposits? And the question is, are we saying that the notary should return the deposit back to the purchaser? Of course, this depends on what has been agreed to in the contract, in the promise of sale agreement. So if it has been agreed that should the purchaser not appear on the deeds, then the purchaser forfeits the deposit, then those funds must go to the vendor. But one should also seek to understand why the transaction was aborted. If the fact is such that the transaction was aborted in such a manner that the funds will go back to the vendor, to the purchaser, sorry, perhaps because it was the vendor that did not appear on the deed, or because the parties agreed that they will not forfeit the deposit, and then that is when the notary should make sure that the funds are returned back to the purchaser through the same channels that they were sent. So that is the situation that we were referring to. So once again, to recapitulate, if it is agreed on the deed that if the purchaser does not appear on the contract, then the purchaser forfeits the deposit, then the notary must fulfill those conditions of the contract and transmit the funds to the vendor. So I think we've covered all the questions here. Apologies for the pauses, but as we explained, some questions would require some thought just to make sure that we're giving you all the points that we need to give you in a relatively quick reaction. Thank you for joining us for both of these webinars. We're going to be uploading these on our website throughout the weekend or sometime early next week. If you do have questions, please feel free to email us over queries@fiaumalta.org. If these questions require some more sensitive answers or some more detailed answers, you are always welcome to give us a phone call. So thank you for joining us and have a lovely weekend.